All right. Good morning, everybody. We made it. All eyes on Jackson Hole this morning and whatever Powell's got to say. One of the subtle behind the scenes things that everybody is looking for is Fed independence and how what happens next will affect what's going on around the world. How nations can bully central bankers into doing their bidding and whether or not that's going to be acceptable, right? One of the reasons that we consider China uninvestable a few years back was the heavy handed manipulation of the government when it comes to their financing and not following the global standards. So that subtle little piece is a big part. Whether or not it'll be addressed remains to be seen. This is Powell's last Jackson Hole event, no matter what. And it'll be interesting to see how he wants to leave it and if there's any pushback at all. Markets may react on it. Otherwise, he is the biggest event, and so after that, we'll see what we get next. Small caps are up the most at 0.5%. Germany's down or up the least, I guess would be the better way to say it, flat or a negligible amount. Europe, Hong Kong, even the Nasdaq at 0.25% faded back to less than that now. The idea of a September rate cut being announced today, I think the market's going to be a little disappointed here. Um, the labor data has weakened, and that's true, but the inflation data has strengthened, and that puts the Fed in a pinch. It would seem prudent to suggest no rate cut yet and remain data dependent, and for him to say we're still looking for the latest job numbers, CPI and PPI before we make an informed decision, rather than just giving us forward guidance and saying, oh yeah, sure, we're going to cut in September, because that would not be prudent, right? That would not make sense at all to project forward rate cuts when we don't know what the data is going to be, right? So that's very likely the key thing today that's going to send this market one direction or another is whether or not he actually does give any hint to the September rate cut. He will be speaking at 10 a.m. And while he could take the entire 15 to 30 minutes, however much time he's allocated to talk, we've seen in the past that he can wrap it up in about 2.5 minutes, like he did in 2002 when he told the market to suck it up and we were going to stay higher for longer. Mic drop moment, classic Powell. Another thing that was being cycled around this morning was the idea that the government doesn't invest in a bunch of companies like tech to support tech the way that, say, China does, right? Government subsidized companies. I mean, we have it in the US as much as they say that we don't, or they want to act like we don't. Take a look at, Raytheon and all the other military complex companies out there that basically work for the government. But the heavy hand suggestion is that while they've already announced they're likely to get into Intel, they're very likely not going to get into any other chip company that brings production home. On the one hand, I mean, that's probably a good thing, right? If you listen to the previous vice president under Trump, he's very vocal on this subject. You know, we got to where we are throughout history by uh, free enterprise. Probably best to leave it alone and continue to run under free enterprise. They say it here, keep your eye on yields. So, you know, every day we're trying to ask the question, if the market moves today, what's likely to be the fuel for the move, right? You got to put gas in the car or plug it in before you go. What's going to be the driver if we get a move? That could be options after 9:30. It could be commodities like moves in gold and oil. It could be treasuries, FX markets. And it can be a combination of all those things for sure. Or it can just be the broader market breadth, like the Mag 7 complex. Some days are more relevant towards one of those than others. So some days it's the 0-day options and the dealer hedging dynamics and GEX profiles and things like that. And some days it's just treasuries, bonds, dollar yields. In the Europe market wrap, they are suggesting it very likely may be yields today. So we would be looking at them anyways, but you know, give them the stink eye. Keep your eye on those yields. Oh, don't get salty. Old crude's trying to wake up there a little bit. Trying. There was no change from the call and the put wall. I believe the 0 gamma line and the volatility trigger moved. Let me update this and we'll see where we're at. 64.14 and 63.77. Yeah. Yeah, it went from 77 to 51. So the 0 gamma line dropped lower. The volatility trigger really didn't move that much, maybe a point. Call wall 65.18, put wall 63.18. 200-point range between the call and put wall is fine. Little bit of a trend line breakover this morning, testing that 20-period daily moving average. So if we bring it out here on the 20th, this green line, we're now completely underneath it after that close yesterday, and we've made a run to get back above it, right? So it's kind of zoom in here a little bit. We are working on IX10 today inside of this really big range, and that's worthless, right? You don't want an IX10 inside of a big range. It's completely worthless. It's like having a Porsche with no motor. Yeah, that's worthless. If we look at the halfback from yesterday, we close underneath the 50%, and that's not good. We need to follow that up today by closing back above yesterday's midpoint as just a good starting point for anything else. We are inside day of yesterday, even with that little wick out that we got. And we've got 3 days of defense along this low, that 63.92 area. It's a cog line. We can see how they've been trying to protect this zone and run it back up and just stop us from closing below that 64, which didn't work, right? We closed underneath 64 yesterday. So first, close above yesterday's mid. Second, get back above that 20-period daily moving average. And then 3, close above yesterday's level, and so we can start working our way back up. We got that 310 surge. So that is a bear surge signal. And we're looking for a cross now of the 320, which would then give us a chance for a 1020 cross. A 1020 cross is a much bigger deal, right? You get the smaller little whiplash crosses all the time. They are nice for a little bit of a pullback signal, something like back here where we got a 310 cross. But we didn't get a 1020 cross, and we didn't get a 320 cross. There's your 1020 cross and what came with it. Doesn't always have to be that, right? If we're in a chop zone, you can get a 1020 cross like we did back here. This was just a couple of weeks of sideways. Lower highs, lower lows from what, mid-December into mid-January before we finally crossed over it. And this whole thing was a few months of sideways. We don't have any of that at this point. So we want to keep our eye on that 20. It's a really big deal whether or not we're going to be able to close above it today. And then the half back of yesterday. These lows that we've seen get defended down here, kind of a really big deal. They're just above that 63.50 like a front run. And if they break, I think we're going to run right through that 63.50. I don't think we're going to get any help there at all. And we're just going to cut right on down to 6,300 at least. And you know, my theory that we've been running 50s, 63 is not a stopping point. 62.50 is. So if we break 63.50, I like 62.50. I liked it back here before we did this, right? I was calling for 50s when we were still up at 64.50 and 63.50. I was talking about 62.50 down here. So I know it seems like a long ways off and it seems like a lot of drama, but it's just what we have, right? There's no reason to argue with what we have on the table. That is our line in the sand. If that breaks, then we're going to see 6,300, 62.92 cog line is the 50 period. If we're likely to break through that and test that 62.50 down there. Now we've wicked down these last 3 days, and we could wick down today. So just because we get a new low today, that's not exactly what I'm talking about, right? We could wick lower than that and we could come back in again. It would be getting price down there and actually closing below those 3 wicks, or getting below it and getting a sustained drive down there today. That would do it, because I think it would snowball and accelerate. So Europe opened really nice. Keep your eye on Europe as they go into the close today. They were the fuel that brought us up off of this low, and once their influence is gone, well, we can see things mean revert. That's if we get some. outcome from Jackson Hole that I would call like muddy water, right? Like we're all looking for really good guidance here. We're looking for clarity, good insight, and a keen understanding of what's coming into September. But he doesn't have to give us that. He can just get up there and do what he does best, which is run his mouth without really saying anything at all. And then we'll be sitting in the same boat we were before he even started talking, that we're still looking for forward guidance and we have no idea what's coming in September, and the markets won't have any more information than they have at this point right now. And if that's what we get, then it's not going to be Powell today that moves the market. It'll be whatever comes next, right? Or whatever the market starts to focus on next. So if we get muddy water out of Powell, then we just lay out our levels and look for what breaks and play whatever we get. It's been an entire week of downward move, right? That's been really clear. Can't miss it. So from, Sunday night to now, there's the Linreg line, and we've just been running it really nice. And we got the opportunity for reciprocation from this depth. That's what it owes us now on the other side. 64.50, no less. Gotta love that, right? That would not make us bullish. That would just be giving us a little reciprocation on the other side. And it would fit what we're looking for out here because we don't yet have our first lower high. I like that. That makes sense. So if we get a breakout today above the high of yesterday, let's go ahead and run it up into 64.50. And unless the news is really good, I wouldn't expect to get past that today. It would have to be something really good. That would set us up for the lower high, and then we could come back down here and try to check that with a lower low. Oddly enough, in front of these events, we often get lighter volume, a lack of participation, and everybody sitting out waiting. We've got more volume today in the overnight than we've had all week. It's still not extreme volume. It doesn't stand out as anything like that. But, it is noteworthy that we've had a solid participation all night long. Looks a lot like Monday, all things considered. Right? Tuesday was gradual and it just slowly picked up. Same thing with Wednesday and Thursday. Monday and Tuesday started out really strong and then, slowed down in the later part of the morning. Remember, the day is half done already. This is the Globex range or the box that we're working on. GTFO, you got to get out of the box to get anything else done. Then you have the box of yesterday, that's just the RTH. And you have the box of yesterday that covers everything. Now, to the downside, all three of these boxes, well, all of the two boxes from yesterday are the same. Only our own Globex low is a new box. So to the downside, getting below 63.65 or our own Globex low offers 63.50 and then whatever comes next, right? It can get pretty shady after that. To the upside, if we can get through our own Globex high, then we've got the RTH and the full high of yesterday. Then we can work on Wednesday's price and maybe even Tuesday's price. The 1, 2, 3, 6 of of all of yesterday lines up with levels that we would deal with from Wednesday. So that 64.32 cog line is going to be a pretty big deal. 64.50 sounds good, but that 32 is going to be tricky to get past. We have a market maker move this morning. They are adding additional hedges. This is not my opinion. I'm not assuming it's a fact, right? They are adding more hedges than the normal hedges that they typically carry. They're concerned and they're spending money on it to protect their positions. What we do with this number, which right now is running at 45 points, is we add it to the edges here. So take 45 and add it to 55, and that gives us what, 65, which is basically the high of last week. That's how far we could move today without even seeing outsized moves, right? When we're always trying to gauge how much of today's price action is beyond the norm, and are we getting overbought and overextended, and have we moved too far? That says we can go to 6,500 and we wouldn't even be overbought yet. The same thing applies to the downside. We would take 45 and subtract it from basically 30, which puts us at what, 62.85, something like that. Napkin math, right? It's good enough. So it still puts us below that 62.92 cog line. And at that point, we still wouldn't be oversold. So that's what we do with that market maker move. Beyond just the idea of looking at it and saying, well, it's a red light, neon sign warning us of risk, it also gives us those projections. Now, I'm making the assumption that it's because of Powell. That's not a false assumption there, but it can be wrong. That could be there for some other reason that we don't know about. So after Powell, we want to see it begin to fade. If it doesn't begin to fade, then perhaps it wasn't Powell that they were hedging against. I'm pretty sure it's Powell, right? But you'll see that tag show up on, CPI, PPI, non-farm payrolls. It shows up all the time. Most of the time, we have a pretty good idea why it's there. And that's fine. It's no big deal. But if it ever shows up and we don't have one of those events on the table, that's where it's the most valuable. Because we already have the idea that we should be concerned on those event days. We don't really need the tag to tell us to be concerned on CPI day, right? Like non-farm payrolls. But if it just randomly shows up on a day when we don't have any economic data scheduled, it's a huge red flag to get you to go looking around and try to figure out what the heck are they scared for. So that at the bare minimum, you know that they're worried about something. Today's floor pivot is lower than yesterday. That's bearish. Price opened underneath it, and that's also bearish. It's sitting at 63.92 cog line in the sand. We've already gotten above it and below it multiple times, so we don't expect to see it act as any form of support or resistance. And it's a narrow channel, all things considered, not as narrow as it could be. We saw a narrower channel earlier this week on Tuesday, but still, a narrow channel implies that we could continue to run if we do break out. Oh, thank you for that. Trump is expected to speak at noon today. Sure is. Thank you for that. Went right past it. So this says 11 because it's recording my own time zone. Most of these others, they reflect the market time. So yeah, that's new. Appreciate it. That's another one, right? To add to the list. So now we've got Powell, and then behind that, we've got Trump. Now these S&R lines, since yesterday was an inside day and we really didn't do much, it narrowed up our range quite a bit, right? You can see how wide the range was yesterday compared to how wide the range is today. We've already made S1 for an example. Just because the range is so narrow, we were able to get there so quickly. Having left S1, it kind of owes us R1 at this point. And that's still inside day. We wouldn't even need a breakout to get it. But to get through R1 and get that breakout and continue to go to the upside beyond that, we're probably going to need more push at that point. Closing above R1 and yesterday's high offers R2. And if we can get past that, we have the weekly floor pivot up there. This distance from the weekly floor pivot is nothing. Statistically speaking, if we go back in the past and look at all the times we extended beyond the weekly floor pivot, the numbers before we got extreme and saw mean reversion was 4.5 to 6% distance from the weekly pivot. We are nowhere near that level. So sure, this did turn around earlier this week and run back, but it wasn't because of the weekly pivot. So S1 offers R2. That's common logic with these S&R levels. Bare minimum, S1 offers R1. I think we got a really nice distribution here. That would give us a double distribution on the week. Could see the point of control come down here by the end of the day if we happen to hang out here long enough. Say we get muddy water from Powell, for an example. It is getting developed lower than last week's. We put in that work down here, and it really seemed like we were going to do that again this week. But we saw more work getting done in that 92 cog line area. So underneath 64, not above it. They were front running it last week. They're underneath it this week. They're just dancing around that round number without loading up the number itself, which still has me leaning towards those 50s. The point of control for this week and last week, they're not perfect, but they weren't perfect back here either. And it just created this zone for us to keep our eye on, right? And that's been a really good zone. All things considered, they've moved the zone up. That's bullish, by the way. Just keep moving that structure higher, right? Breaking the low on the week offers a chance to test the point of control of 63.50. It's actually like 63.42, which is an old cog line we don't use anymore. But still, it puts 63.50 on the table, and that's the number we've been focused on anyway. Ten-day, 30-minute volume profile with TPO. Before we dropped down into this zone, the idea was that we would lose these candles on the left, and we would end up with a much narrower value area. Well, now that's off the table because we've put work back in down at these levels. And the point of control, when it gets moved, is very likely going to end up around that 64.11 area. Because eventually we're going to start to wipe these candles out, and we're down here putting in new work, right? So out of these two distributions, we're going to very likely see that point of control get walked down into this lower zone, but it's not going to happen for a week at least. No real discrepancy between these two either. The shallow area, if we do get a breakout, the shallow area, we should be able to run through that zone really quick and make it right back up into that point of control. So overshoot 64.50 and put us right into that 64.70 area. Now, it's funny, we were talking about double bottoms yesterday and how double bottoms are a bear trap. And of course, I'm kind of picky about my double bottoms. I don't like them to be equal. Let's just run it up there. The top up here doesn't matter. It's more of this bottom down here, right? So I'm kind of picky. I don't want a double bottom that has a matching low, because to me, that's an upside down cup, and cups continue to the downside, right? They give you a little handle and down they go. But double bottoms are a bear trap. And you know that you have a really good trap when, one, you spring the trap, and then two, you see the results of the trap. So for me, I like double bottoms that expand lower than the previous low so that the bears will actually get in there. Step one. And then two, we spring the trap. So we have to go lower than the previous low so the bears get in. Then we rip their head off. Look at the buying fuel that came out of that run. The long reversal on that bar, just absolutely beautiful. Shot back all the way through the half and closed above it. Next candle opened, never even came back to the half. And then that powerful run back up. That is the beauty of a double bottom, right? Right there. That sort of response. Just got to love it when you see it, right? And it helps that it reversed off the 111 too, but you know, you don't always get it as good as that. Just thought I'd throw that out there. That was a really good example. It's almost textbook. It wouldn't have mattered where I snapped my lines, right? It was just more of an idea of looking at the bottom. Same thing works for the double top. They're supposed to be bull traps. You need to overshoot the previous high and get to a new high. And then you want to see that the bulls actually got in there, got trapped, and then ripped their head off. Sounds so violent. We got a little discrepancy between the TPO and the volume profile point of control here. But it is a classic P shape at this point, with the point of control offering a little bit of insight. But at this point, we really don't have anything of value. The low, the reversal down here, this is something that Dalton covered a lot, right, in his work. This really narrow distribution and reversal. There's nothing there. If we go back into that, we're going to cut right through it. No point of control from yesterday. We've already run through that level multiple times. The value area high and low of yesterday offers no insight. You can see we've run through that also. it didn't provide any assistance. So yesterday's profile, not really giving us anything of value today. And like we do every Friday, we have next week's range projected. Now, it's just a projection. It's not set in stone yet because it's still alive, it's still moving. The gray line is where price is, and the green and red lines are the projections for next week's range. But through the day, as next week's volatility expands and contracts, so will this range. One of the things that we can do with it, even though it's not locked yet, is we can compare next week with the week that we have and kind of ask, hey, what's the market pricing in for next week? This is how a lot of times we get an idea that we're going to go sideways for half a week, or that nothing's holding us back and that we could potentially just break out and run next week. Though we're not getting that this week. It would have been nice if we had, but we ain't getting it. If the range was really narrow, that would have given us some really good insight, but it's not narrow. It's basically the same range that we had this week, and that's not helpful, but it didn't hurt to look. If we had been in a narrow range and next week was really wide, that would have given us some insight. Or if next week was really narrow compared to the current week we had, that would have been valuable. But seeing it the same as the week that we had this week, that's not really helpful, other than to say that we could see the same next week that we did this week. Breakouts, consolidation, expansion, and that's just like, gee, thanks, right? Captain Obvious kind of stuff. So not helpful, but you don't know until you look. We're still more than 1.5% above the 10-week, and that's fine. We're still working our way back down. There's nothing wrong here on the weekly, which puts us in a backdrop for swings and trends that are still bullish. There's nothing wrong there. There's weakness. There's certainly red lights flashing, and we are getting some signals of concern, but we don't have confirmed short signals in the market, and the trend ain't broken yet. Now I put that on a daily, and we're working on day 3 below the 10. I guess day 4. Yeah, day 4. But we're already working our way back towards the 10. So we're below it by more than a quarter. We left the low behind, which was more than a half. And at this point, what we don't want to see is another day where we expand lower than the previous day, right? We hit close there, then we did it here, then we did it there. We don't want to cross that line today and close lower. That wouldn't be helpful. This also is telling us that we're good. We're not overbought. We're not oversold. We haven't moved too far too fast, and it doesn't owe us any sort of mean reversion at this point. The market is under the 10, but not in extreme ways, and it's a good place to be. With all eyes on Powell this morning, it's not going to be much of a surprise that we don't really have a lot of things moving around up or down more than 0.5%. Gold miners are down more than 0.5%, but really that's all we've got. Flip it around the other way. Okay, we've got China, uranium, more China, China, China. Mag 7 up volume is up. But look, it was down more than 10% in a 5-day period. So that's kind of extreme. We're due for a little bit of a pullback in that space just because, right? You move 10% in 5 days, you're going to get a pullback. So I wouldn't see that as bullish. And then China again, and that's really all we got. Just China and uranium and some Mag 7 volume. Positive Mag 7 volume, but that's it. So as we expect, the market's waiting on Powell. Gee, thanks, right? Like, couldn't have seen that coming. Base case argument at this point is that Powell's going to give us muddy water, no real clarity about September, and the market is going to turn to the next issue on the horizon and start to over focus on that. That's the base case, that he doesn't, grow a backbone, he doesn't push back, and he just gets up there and runs his mouth for 15 minutes without really even saying anything. If we get anything other than that, it's very likely we're going to break the range and we're really going to expand today. And which direction we go will very likely be dependent on what kind of pushback he gives. If he pounds the table and says, you're not getting your cut, well, I think the market's the equity market's gonna give it to him. But if he bends over and takes it and says, we're absolutely gonna cut in September, I think the bond market's gonna give it to him. So he's in a pinch. Whatever he decides, equities is gonna hit him or bonds are gonna hit him. And his safest bet is just to walk the tightrope and say nothing for 15 minutes and go into the weekend. So place your bets. Anybody know what the Vegas odds are or whatever that there's that app, right, that just runs probabilities on everything. It'd be interesting to see what the over and under is on whether he projects a cut for September or just flat out says no to September, rather than being wishy-washy and remaining data dependent and saying, we don't know, we need to see the numbers, which is really his safest bet. That's what I got for you guys. Be careful, be safe, have a good weekend. Watch the clock, keep your eye on the news. I'll see y'all next week.